Hi, this is Jackie Ann Patterson, and I'm here to record a video showing you how to use divergence alerts to find strong technical signals in the US stock markets. So this video is going to use the spreadsheet method, which is available to subscribers. And to get started, you need to A, be a subscriber, and B, log in to the website, which you can find here at divergence-alerts.com. And that website will tell you some things about divergences, including why they're important, which is that they can be a very strong buy signal in the US stock market. And perhaps even more importantly, is they tell you times when the price may not be representing the underlying sentiments of traders. So times when the price and the indicator are diverging or doing different things, it may be that the price is about to change direction, and that's what we're on the lookout for. So these things are kind of hard to spot. You can see them by eye fairly easily, but you need to scroll through a whole lot of charts if you want to know where they're happening in the stock market. And the other thing about divergences is that there's key times when divergence trading works out better in the stock market than at other times. So through the data on the website and through my newsletters, I aim to show you the better times to be trading with divergences and an overall context of what that tells you about the stock market. So for subscribers to get started, come to the website, divergence-alerts.com, and hit this little login button here. And it will bring you to a login screen. I'm going to log in with a Platinum account, and what I'm about to show you will work with either Platinum or Gold subscription levels. Okay, here we are inside the divergencealerts.com membership area, and you'll see that there are a lot of different menu picks here. These are the menu picks. And the one that I am most interested right now is daily, because this will get me to the spreadsheet. One of the others you might be interested in looking at is backtest, which will show you the recent performance of how divergence trading has been doing on stocks and ETFs. Coming back to the actual finding of divergences from the daily page, you can look at directly the alerts that have come up that day, or you can download a spreadsheet with everything in it. And this works well when you have a internet connection that you can bring in all the data and then take your time looking offline. Also works well just if you enjoy spreadsheets and having everything in one compact place. Okay, so it has downloaded the spreadsheet. I'm going to click on it to open it. You might need to go to your downloads folder to find it. Okay, it's a pretty big spreadsheet, so give it a moment, please, to download and to come up in Excel. And I believe that this spreadsheet will work pretty well in Excel and in OpenOffice. So there's no real macros here. It's an Excel XS file, so there's no macros to run or get goobered up by the different versions of spreadsheets. Okay, so this opens up to the ETFs tab for ETFs. And as you can see, there's a whole bunch of tabs along the bottom here, and I'll go through what each of these mean. What I'd like to explain first is the layout of this, which I call a scorecard, this matrix. So let me scroll up, and you can see in the first column is a whole bunch of tickers, and then in each of the other columns are a different MACD divergence signal. So the first four are on weekly charts, the second four are on daily charts, and it starts with the MACD lines, positive divergence, the MACD line's negative divergence, because these are, I think, the strongest signals of those I'm showing here on the weekly and daily charts. For Platinum subscribers, I also make hourly divergences available, and I'll show you that in another video. So looking at each of the different types of divergences, there's an intersection point between the column of the type of divergence and the row for the ticker. So you can see, for example, the dates of the divergences for, say, this ETF, ARKK, one of the newer innovation ETFs, and you can see that it had negative divergences in 2018, 2019 on the weekly chart. Then on the daily chart, you can also get more insight to when it had divergences, and you can spot some times when the divergences are coming kind of in succession. Like in 2019, there was a weekly chart negative divergence in August, and then that came around to a daily chart positive divergence in October. So you can kind of see the timeline of this. What it's showing you is the most recent divergence, so things get overwritten if there's more and more divergences. The other interesting way to look at this sheet is to note that these little boxes with the triangle in them are sorting. So if you want to see, say, what ETFs had the most recent weekly divergences, you can click on the triangle, sort newest to oldest, and it will put the most recent divergences up at the top along with their ticker and with their name and with a link to the stock charts. So this SRTY is a ultra short Russell. So this is actually a bearish signal on usually positive divergences are a bullish buy signal, but when it happens on a bearish fund, that's a bearish signal. And we can take a look at the chart fairly quickly just by clicking on the stock chart link, and it'll bring up a chart here where you can see how it has in fact made a divergence by making a low with the MACD at one position and then a lower low with a higher position of the MACD. Okay, so coming back to the spreadsheet here, we can look at the various different ETFs. And we can see this week there were no weekly chart MACD lines, negative divergences for ETFs. And there were, however, some daily chart positive divergences recently. So you can see some of the, these tend to be the commodity funds taking off. And we can also have a look at daily chart negative divergences. So one of the interesting things that you can also do with the spreadsheet is take a top-down approach from the ETF. So you'll notice that some of these ETFs have a link on its ticker name. So you can follow that link and it will take you to another sheet of another scorecard that includes all the holdings of that ETF. And then these have their divergences cross-referenced. So if you were, say, concerned about the negative divergence on the home builders, ITB had a negative divergence, then you could come here and you could see that inside, well, DH Horton, there's a big home builder with a negative divergence on its chart. So in that way, you can drill down, and this is probably more powerful when there are positive divergences, and then you can drill down from an ETF into the holdings inside and figure out if there's a specific stock that is showing a nice divergence and it might move faster than the overall ETF. And as you can see along the bottom here, there's a whole bunch of different ETFs that have their holdings. It's not every ETF in the world, that would get kind of big, but it does cover a lot of the different sectors in the market. And that includes, here we go, the the high-level spider sector funds, as well as the Dow Jones sectors uh, by iShares. And then coming near the front where this is saved, you'll find some of the big main stock indices, such as the spiders and the Dow Jones average, where you can look at the same thing. And you'll notice some of these have an NA. That's because this is cash, and so there's not really a divergence on that. So things that don't find a match in the US stock sheet have that NA pattern. And the US stocks is just what it says. It is a little bit over 3,000 stocks here, scrolling down, that has the same sort of scorecard, has the same sort of sorting. So you can look and you can say, okay, where are the MACD positive divergences? That is the most interesting signal. And look, there's quite a bit of them. So you can, if you want to pick out something to drill down, you can look at the stock charts. What I do to look at a whole bunch of these at once is I will select it and hit Control C to copy. Then I come over to TradeStation. I have my charting all set up, and I just paste into Radar Screen. And then I can take a look at these different divergences. So one of the things that is important when you're looking at weekly chart divergences is to have price action in the same direction as the divergence on the day it's showing up. So I'm recording this actually on a Sunday after Friday's action. So the stocks that say had a big day on Friday, big up day like Chico's Fast here, that is much more interesting to me as a divergence trade than say one that had a down day like HFC. I'm just picking on one. So even though that might have a nice divergence pattern, it looks like the daily price action came up near the 50-day moving average, hit resistance, and fell down. And in other videos, I've kind of detailed what my charting setup here is. So I'm looking mainly at price and the MACD. On the weekly chart up above, on the daily chart, I've got a 200-day moving average and a 50-day moving average and a Keltner channel and a MACD plotted. Okay, so looking down through these, I'm picking out from here where there's a green positive percentage change on my positive divergences. And then I look, say, here's an interesting example, Kaiser Aluminum Corp, KALU. And looking at this chart pattern on the weekly chart, I can see how the price came slamming down here, found some support, drove the MACD lines all the way down, had a bounce, and now is coming back up. So the key question, that anybody interested in this stock, is this going to make a double bottom W sort of pattern, or is this just a bounce and now it's going to continue down? Well, we can see from the MACD that there was a lot less downward momentum in this down movement than in the original one. So this is a good prospect for potentially a positive divergence buy signal. And what I would look at to continue to check that out, I would like to see its key statistics. So one way to find that, here we have KALU in the spreadsheet, and I can just click a link for key stats. You probably saw the stock charts link. I could bring up a chart there if you don't have TradeStation or another setup you're familiar with. And then clicking this key stats brings me to the typical Yahoo Finance printout of what's happening on its books. So I can find out that currently it has some reasonable numbers. It's at least been profitable. There's a positive net income. The growth has been slower, negative, but it has also a positive cash flow. It's got a nice big dividend. So there's some potentially interesting things about this stock, KALU. Now, for me, I would tend to go ahead and watch this for a little while, see how things play out. see what's happening in the broad market, and especially now as we're coming up to an election that's going to add some volatility, maybe a good time to be cautious and really be prepared to also be nimble with the positions we take or don't take. In any event, this shows you how to make use of a divergence signal. And I think it also shows you that it's not just the divergence that makes for a profitable trade. There's the overall market context, which I cover in the weekly market status email to subscribers. And I do plan to go through videos of each of those segments over time. There is on the Divergence Alerts website a video that talks through, in general, gives an example of a recent market analysis. I would like to come back and show you other features of this spreadsheet. So inside the sheet, there's more. There are the daily and weekly lists of the divergences. And a couple things that are interesting here. One, starting at the top, are the lists of the candle glance charts. So these things bring up a bunch of thumbnails in they bring up the thumbnails in stock charts showing you what the recent divergence are. So you have a way to look through the charts pretty quickly. And if there's more tickers than will fit in a single candle glance chart, they're spread out here. And then looking down at the tickers and the signals, you'll recognize there's the sorting buttons. So if you're looking for a particular type of signal, you can sort on that, or a particular strategy. For example, shorting on negative divergences, which, by the way, I find a very risky strategy and have lost a lot of money doing that. I think the much better strategy is the positive divergence long strategy, and looking for the positive divergence buy signals when the overall market is conducive to that. So here's an example of that kind of buy signal, and it's got the ticker name. It's also got some statistics of what the current price is, what an ATR, an average true range, would be that would make a stop loss, and then assuming that you want to risk $100 between your stop and your potential buy price, then it has a trade size. So you can scale that up according to whatever your own risk parameters are. It should be easy to multiply by 100. And then there are the links to, again, the charts and the key statistics. And one other interesting signal type is the tomorrow. So these are signals that are upcoming. It's possible to calculate the price when the next divergence will happen. And all of these upcoming, as it happens on this spreadsheet, are the upcoming negative divergences. So if you were looking to, perhaps you were holding, say, EXLS for some reason, and you're waiting for a sell signal, you could calculate the price of 68.04 when that would come along. What is also useful is if there's a buy signal. Here we have one on MNK. If you were interested in MNK, which might not be a great thing at 99 cents, but say for some reason this is interesting, you can see it on the tomorrow list, and you could set a buy order for 99 cents. And when the price reaches that, that would be the completion of the positive divergence signal. So these signal types and this information is available for the US stocks on the daily chart, on the weekly chart, ETFs on the weekly chart, see, it's the same sort of thing, and on the daily chart. One other item, and perhaps saving the best for last here, is the DCI, or divergence count indicator. So having gone through the scans and found all of the divergences on 3,000 stocks in the stock market and doing that day after day after day, um, there is a unique opportunity to create a market-wide indicator from that, and that is what the divergence count indicator does. So in this spreadsheet over here on the left side, there is a line for every date, and there is a count of the different types of divergences. And then the spreadsheet starts doing its number crunching of looking at differences between positive and negative. And as I scroll over, the stuff that I've become the most interested in is the 20-day moving average of the count of the divergences. And it turns out historically that when this column R, which is the count of the MACD line's positive divergences on the daily chart, when this has been over 10, that has been a better time to buy on a divergence signal than other times. So what that's saying is if you're looking at a stock and you're saying, wow, today this is the only stock with a divergence on in the whole stock market, that's probably not a good time to buy. It's much better. Everything in the market runs in herds. So when the whole bunch of stocks have been pressed down and now they're coming back up, like we're seeing here with an average of 16, then that becomes a better time to buy on a positive divergence signal. And then likewise, looking at the negative divergences, it turns out that there is almost always a lot of negative divergences across the stock market. And there's been a few times where there have been very few negative divergences, like less than 5. And when you see that get down, you can see this is dropping. So we're coming near to a point where there's very few negative divergences in the market. And those have historically been the sweetest times to buy on a negative divergence, when we've had a lot of positive divergences and very few negative divergences. So I look at this and I consider it kind of like a buying window of, it's a gate to see if we've got a lot of positive divergences, then the window's open. And then if we have very few negative divergences, then it's a really great time to be looking for stocks to buy on the divergence signal. So I encourage you to keep an eye on the divergence count indicator. Then the one other interesting, very interesting tab in here is the legend, which has the instructions, and it tells you a lot of the things that I've told you in this video. So you can use this as a reference when you're looking at what in the world is going on in this giant spreadsheet. Okay, so there you have it. I've shown you how to identify divergences, how to stock divergences before they even happen, and how to understand when the market context is conducive to divergence trading. So if you have any questions, please drop me a line or leave a comment on this video on the website, and I'll get back to you as soon as I can. Meanwhile, stay safe and take care.